You are listening to chartingwealth.com for Tuesday, the 8th of August, 2017. We see that stocks are up for the day, both the S&P 500, about 0.19%, the Qs, that's the Nasdaq 100, 0.63%. Also bonds, 20-year bonds up for the day, 0.11%, and gold down 0.12%. Let's first jump right into the S&P 500. Before we do that, at the end of the program, I'm going to give you a pep talk on what you need to do to accelerate your learning how to read these stock charts. It's pretty apparent, isn't it, my friends, that if you can read these charts, it can potentially mean early retirement, millions in your retirement account, money to spend, all sorts of things. We are an education firm, and we want to tell you how you can really supercharge your ability to read these charts. Because if you can do that, if you learn how to follow the trends, then of course the world is your oyster. And we're going to talk about that at the end of the show. But first, for our hardcore listeners and viewers, we're going to cover these charts because that's what it's all about. Now let's jump in. What's going on with the S&P 500? Like we said, up 0.19%. We can see we're going into our fifth week of upward movement, but as we hone into this and look at what's really going on, we can see that the high all the way back on the 21st of June, 247.42. Where did the market close today? 247.65. So does that look like a market that's continuing to just bound up skyward forever? In fact, it's just now hitting the high that it hit 4 weeks ago, going on 5 weeks ago. Going on 4 weeks ago. So again, when you look at this, keep that in mind. We still cannot get our biggest indicator, that is the PPO, the price percent oscillator. It still will not cross over going up. It will not. The blue line will not cross over the red signal line. It is amazing. Why? Because of the sideways slippage of the market. This oscillator tells you that. Now, what do you see going on with the derivative oscillator? It's continuing to move up, but it is not our prime indicator. The derivative oscillator is calculated differently. We use it to coincide. We feel great when they both are going in the same direction, the PPO and the DO, but when we just have the PPO going sideways and the derivative oscillator going up, it doesn't mean we jump into anything. We do not have a weekly vertical crossover going up. We're still in a confirmed down move, just barely, from all the way back on the 23rd of June. So let's look a little bit closer and see what's going on with the 2-day chart. There you can really see it, my friends. You can see the sideways slippage, particularly from the 26th, back on Wednesday of last week. We see, Wednesday of last week, we can see what's actually going on as the market. No, that's actually the week before last on the 2-day chart. So we can see that it peaked out on the 26th of July and has continued to slide sideways since then. We have drawn a trend line. It only connects two green candles, not much of a trend line, but there is an upward trend. But again, remember, weekly chart, all things being equal, the market always tends to move in the direction of the biggest chart, and that's the weekly. So we continue to keep an eye on this, but nothing strong. In fact, derivative oscillator on the 2-day chart's losing energy, and we see a sideways slide in the PPO. What does this mean? It means that we just don't have a strong uptrending market. Is it getting ready to turn over? I don't know, but until we get confirmation with an indicator, we don't do anything, particularly when we have our weekly chart going one way, 2-day chart going the next. It's even more pronounced when you look at the Qs, the Nasdaq 100, still in a confirmed down move on the weekly chart. Derivative oscillator's losing its downward momentum, but its momentum's even still in the negative. We have, again, a chart that topped back on the 21st of June. That's going on 4 weeks, July. That's going on 4 weeks ago. And we see the market sliding sideways, even more pronounced when we look at the 2-day chart. What do we see going on? Well, Market topped out back on the 26th again of July and has continued to move down and sideways. If we look at that 4-hour chart, what do we see going on there? Well, it did move up throughout the course of the day, but it's not even crossed over yet on the PPO going up. Derivative oscillator has switched over into the positive. And briefly, going back to the S&P 500, neglected to cover that. It's not crossed over going up yet, may be happening soon. The market is holding above that 2-day trend line. So again, we'll continue to watch and see how much upward pressure this market is going to have. If we do have a weekly vertical crossover on either of these stock indexes, we will sure let you know. Now, let's go back to our weekly chart. Take a look at TLT. It was up a little bit, 0.11% for the day. What do we see going on there? Well, it's in a confirmed up move since all the way back in February. It's been sliding sideways, as we've talked about over the last couple of weeks. What's happening, of course, is bonds, which tend to be a safe haven that money flows to when the market turns over and goes down, that is the stock market, bonds seem to just sort of be hanging out, waiting to see what's going to happen with the market. And it is tending up right now just for the beginning of the week, but it's really been lots of indecision as shown by the dojis over the last 2 prior weeks. Dojis are forms of Japanese candlesticks. They, of course, mean that the market's opening and closing around the same time. Dojis typically mean indecision. The market can't decide what to do. Bond market in particular, because it's waiting to see what happens in the stock market. Remember, they're inversely correlated typically. When the stock market is trending down, the bond market typically trends up, and vice versa. So we see up just a little bit for the day. Derivative oscillator still in the negative on the weekly chart, but it is still crossed over, moving up. Like we said, since February, we look quickly at the 2-day chart. What do we see? It has not crossed over yet going up, was getting very close back on the 3rd, did not happen on Monday the 7th. We see an interesting formation. We basically have a candlestick where the red open box body is about the same size as the wick on top and the wick on the bottom. And again, indecision again continues to show as the bond market waits to see what the stock market's going to do. On the 4-hour chart, still in a confirmed crossover going up. However, it peaked out back at 4 p.m. on Thursday, the 3rd of August, and has been going down and or sideways since then. So we'll continue to keep an eye on bonds. When we have a definable trend, we will let you know, my friends. But until then, we hold tight to our money. First rule, don't lose money. Second rule, make money. But when you lose money, it's so much harder to claw it back. So again, we want to be safe. We want to be smart. And again, when we're talking about money, we're not a stock calling service. We're an education firm. We're talking about your virtual practice trades. Now, lastly, we'll look at gold. What's going on with gold? Gold is still, well, gold is trying yet again, as it did last week, if you recall. We saw this same pattern where it originally crossed over at the beginning of the week on the weekly chart, and then it dissipated and didn't make it when the week ended. Well, we're seeing the market on gold again try to cross over going up. Derivative oscillators finally crossed over, but again, it's only the first day of a candle that's made up out of 5 days of movement. So don't bet the farm on what happens on the weekly candle, on any candle, until that time period closes and you actually have a finished candle. Keep that in mind. Very important lesson there. What's happening so far? Gold sliding sideways. Again, waiting to see if there's going to be a confirmed up move in gold. Take a look at the 2-day chart. Of course, it's sliding sideways and down. We saw it peak out on Friday, on Tuesday the 1st on this 2-day chart. And then we saw on the chart ending on Thursday the 3rd, some down movement. And then, of course, the chart that ended on Monday, the candlestick that ended on Monday, portending down with a red solid box with a down wick. And again, the PPO sliding sideways on that 2-day chart. If we take a look at the 4-hour chart, which is, of course, the total trading chart for us in gold, it crossed over going down back at 4 p.m. on Wednesday the 2nd. And of course, if you would have jumped in when the market sometime in the afternoon after that candlestick closed, I'm sorry, that was it crossed over. So sometime in the morning after 10:30, of course, we wait for idiot hour to be over. Somewhere around 120, of course, we've seen the market down to about 119. Remember, the 4-hour chart is a total trading chart. Unlike everything else, we watch this 4-hour chart time and time again. It works like magic. When it rotates over going down or over going up, it seems to work time and time and time again, about 8 to 9 times out of 10, up until December the 15th through about January the 15th. Folks, that's where we are. Those of you who don't want to hear my explanation on how you can supercharge your training, that is it as far as the market review goes. For those of you who want me to follow up on the initial remarks I made, we'll jump into that now very briefly. This is how you make the most of the 10 minutes we bring you every day. It is to go to the website, chartingwealth.com, sign up for our daily market review. You will receive the video every day, plus you'll receive in an email format where you hit the video where it says video is here. You hit that link, it'll open up our YouTube video, which you can listen to. Along with that email, you will get our How to Read a Stock Chart video, which is what you need to listen to. In fact, you might listen to it 2, 3, 4 times to understand totally what we're talking about first. It takes about 15 minutes, that's all. That's really all it takes. It can be that simple because we keep it as simple as possible. We KISS, simple and straightforward is what we try to do. Now, the other thing that we want you to do in addition to that is we want you to download the layout that's also provided to you from freestockcharts.com. Freestockcharts.com is a free charting service. We provide you with our layout. We tell you how to download freestockcharts.com and then how to download our layout in there. It's what you see on the screen in our broadcasts. Then we have our daily market worksheet, which you fill out every day, Tuesday through Friday. Over the weekend, we provide you also with the weekly market worksheet. These are PDF files that you can download on your computer, print out as many as you want. Fill that out, the weekly market worksheet, once a week. And then every time we have a trade that you do a practice trade with any of the 4 ETFs that we follow, or inverse ETFs, or puts and calls. If you're going to do puts and calls on the ETFs that we follow, use the trade worksheet for your virtual trade. Now, you hear me talk about virtual trades because we're not a stock calling service, we're an education firm. We want you to practice, and you will supercharge that practice if you keep a running journal. Why? That journal will give you a repository of all of your thoughts, your impressions, the things you learn, the stuff you write down. Some people say, well, can I get that so I can do it on my computer? We don't want you to do it on your computer. We want you to print it out. We want you to write it down by hand as you listen to the podcast every day and track it. Then we want you to go in to a virtual account that you can set up at virtually any of the online brokerage firms. And we want you to practice going in, looking at the bid-ask, buying the ETF or buying the put or the call, and practice trading and see how good you can get, what kind of mistakes you make, and you'll learn more from your mistakes than your successes, and how you recover from losses, what you do to maximize your gains, how you figure out what's best for you for jumping in, for jumping out, how to use the weekly vertical crossovers and all. And also go to the website maybe once every other day or so and listen to the trainings that we have available there. They're also available at our YouTube channel under Charting Wealth. We want you to listen to those. And again, make notes, think about things, write stuff down, learn your lessons, chart them, write them down in the daily and weekly market worksheets and the trade worksheet where you keep up with your profits and your losses and what you learned and why you got in, why you got out. If you will do this, It'll take you the same 10 minutes that you're sitting there listening, and you may listen in your car. Well, you can sure listen in your car on the way home. You can listen in your car. You can then get home and then fill out that daily market worksheet. But you need to do it every day. If you're not filling out the daily market worksheet, the weekly market worksheet, and doing practice trades, you're wasting your time with us. Stop. Maybe you like hearing my voice. It's entertaining. Maybe you daydream a lot, and one day you hope that you're going to be able to make this stuff work and be a multimillionaire, blah, blah, blah. That's fantasy. You are wasting your time. If you are not going to do the work, spend 10 minutes watching Game of Thrones, playing Sudoku, something else. But if you're serious, please spend the additional effort, same amount of time, charting down what we talk about, filling out your daily market worksheet, and doing practice trades. Now remember, this time of year is the crappiest time of year there is. So those of you who are joining us or you've not been through this summertime trading zone, it sucks. It is a crappy time of year. There's not a lot of volume. The market can go up or down, sideways, herky-jerky, because there's not a lot of volume, and small things can make the market react more. But it's good to practice in the crappy times so that when you're in the fat, beautiful fall-winter trading zone and you've got the market flowing in one way or the other with strong movements, then it's beautiful. And you can go back and look at the beautiful movements we had during that fall-winter trading zone. Folks, I hope that is a good pep talk, because I really want you to stay focused and realize what counts. You can do this. I believe in you. I know you can, and you know you can, but you've got to dedicate your time wisely. And remember, the things that you concentrate on are the things that will happen, good and bad. So focus on what will make a difference. Daily market worksheets, weekly market worksheets, trade worksheets, practice trading, all that. You will work on this. It may take months, it may take years, but I'm telling you, if you focus, you stay focused, you practice, it will come to you. God bless, my friends. All the best from the whole team here who believes in you at chartingwealth.com.